You're watching Silver News Daily. Subscribe for more. Did you know that silver prices could soon skyrocket past $1,000? Stay with us to find out why experts, including Andy Schectman, are making this bold prediction. In today's video, we uncover the surprising factors driving silver demand through the roof and why the supply may never catch up. You need to hear this before making your next investment move. The future of silver could change everything.
Right? So you think all of these countries going deeper and deeper, deeper into debt. At the same time, they're buying more and more gold and bringing it all home. Bang, they revalue gold. Just like that. There will come a time where they revalue gold and gold skyrockets, making their balance sheet from putrid to solvent. Just like that. Because right now, the gold held in that gold revaluation account is not able to be counted as an asset against a liability. If they revalue it and change it to where it is now an asset on their balance sheet, everyone's balance sheet goes from upside down to perfect. Gold is now an asset that can be held in your own borders for the new unit currency traded on the Enbridge. Do you see how this becomes very serious very quickly for the settlement status of the dollar and the reserve status of the bond market? And when you talk about little by little by little by little by little by little, and then someday all at once, it is so clear that it's in front of us, yet no one's really putting all these dots together. To me, it makes great sense. And they understand what inflation does. They understand that the inflation is out of control. They get it. The money creation has been off the charts and continues through brain dead, irresponsible fiscal policy, creating $1 trillion every 100 days, and probably a lot more than that. And that's just the U.S. Everyone is doing the same thing. And so the point of it is there is an answer. Keep buying gold, repatriate it from all of the centers where it used to be held, so you had access to the LBMA and the COMEX. Now you bring it home because it will be part of a new settlement currency that you keep in your own sovereignty that will be audited independently, but gives you the ability to sidestep SWIFT, be free from sanctions. You put it all together, it kills all these birds with one stone, and the BIS is behind it. The same entity that revalued gold to a tier one asset. And one last.
Andy Schectman is a renowned expert in the precious metals market and the president of Miles Franklin, a precious metals investment firm. With decades of experience in the industry, Andy has been a vocal advocate for the strategic importance of silver and gold in safeguarding wealth. Today, we delve into Andy's recent discussions and insights on why silver demand is set to outstrip supply, and how this could lead to an unprecedented surge in silver prices. His expertise provides a unique perspective on the critical factors influencing the silver market and what investors need to watch for.
Very strategic in terms of their shipping lanes and their trade routes on top of their natural resources. Do you see how all of these ducks are being, put in a row, one after the other after the other? And what did Zoltan Pozar say? Oh, that's right. Bretton Woods 3 is all about commodities. They have now the soft commodities, the hard commodities, the precious metals, the rare earths, the shipping lanes, the trade routes, the military might, GDP. These idiots who continue to poo-poo this as a nothing burger, and now they have the damn trade vehicle, including a common settlement currency and a platform to sidestep SWIFT. But you're right. Recency bias should prevail. The BRICS is nothing. Just keep on walking and don't look here. Look at NVIDIA and Bitcoin and Apple, these shiny objects, and ignore what the majority of human population is doing. They are setting the stage for that all at once moment. And it's never been more clear to me. Yet the fact that this media over here does nothing to talk about what should be the most important story of the world, so many people have no idea what's come and done again. And yes, I continue to harp on the same story, but you can see it's coming together now. It is truly coming together. Everything that I talked about in 2020 when Nancy Pelosi said there would be that virus could live on currency, there'll be a digital currency. I mean, all of these things, you knew it. The crumbs are laid at our feet. There will be a digital currency, whether it be here or there. That is where we are going. And as far as what the BRICS are doing, they've told us they're going to peg it to gold. And so it's these commodities are now ruling the roost. They are all replacing the demand to own U.S. treasuries, which we have proven we will weaponize and also destroy the value by letting rates rise. And when you see what's happening to the 10-year treasury, again, rates are going higher. They will not go lower. I keep saying this. To think rates will go lower is a mistake. Maybe they try and jack around with the short-term rates into the election. Well, that's not too transparent. But the long-term rates, These countries don't want our bonds anymore. They want commodities, and they will sell them. They will continue to offload them and buy things like gold, like rare earths, like base metals, and even like soft commodities, because that is Bretton Woods 3. And if you don't see this, if you don't see these pieces that I'm trying to show you are all coming together now tightly, then you're missing the picture. So with all due respect to the dollar bulls and the milkshake theory and all of these things, which have been true and are true until they're not, need to understand that we're getting closer to that moment than we have ever been. And if you don't see that, you're going to miss a once in a generation shift away from what is normal into a new normal. And well, I think all of these pieces coming together certainly make that up.
When we look at the historical performance of silver, it becomes evident why this precious metal holds a unique place in the investment world. Unlike other commodities, silver has a track record of outshining its peers, especially during bull markets. Historically, silver has delivered remarkable returns, often outperforming gold, particularly in times of economic uncertainty and market volatility. From the end of 2018 to June 2024, the price of silver rose dramatically by 90%, climbing from just below USD $16 per ounce to USD $30 per ounce. This surge was even more pronounced for Australian investors, where the price more than doubled, reaching just below AUD $45 per ounce. Such significant gains underscore silver's potential as a high-yield investment. What sets silver apart is its dual role as both a precious metal and an industrial commodity. This unique characteristic means that silver's price is influenced not just by investor sentiment, but also by its extensive industrial applications. During bull markets, this dual demand often leads to explosive price movements. For instance, in past bull markets, silver has consistently delivered average returns of 384%, a figure that dwarfs the average returns of 114% seen in gold. Furthermore, silver's performance as a hedge against inflation cannot be overlooked. Historical data reveals that silver has delivered average gains of more than 17% in years where inflation averaged 3% or more. This inflation-protecting quality makes silver an attractive option for investors looking to safeguard their wealth against the erosive effects of rising prices. The relationship between silver and the stock market also plays a crucial role in its price dynamics. Unlike other precious metals, silver often performs well when the stock market rises, thanks to its industrial demand. This correlation provides investors with a diversified risk profile, where silver can serve as a valuable hedge in both booming and faltering economic conditions. Moreover, the gold-to-silver ratio, GSR, provides additional insights into silver's investment potential. The GSR closed at 75 at the end of June 2024, indicating that silver is undervalued relative to gold. Historically, such ratios have often preceded periods where silver significantly outperformed gold. This historical pattern suggests that silver may be poised for substantial gains in the coming years. In summary, the historical performance of silver paints a compelling picture of a metal with the potential for high returns, effective inflation hedging, and strong industrial demand. These factors, combined with its historical outperformance during bull markets, make silver a standout investment option. As we delve deeper into the current market trends, you'll see why experts like Andy Schectman believe that silver's best days are yet to come.
Imports of silver from that India has been doing from the West, and it's massive, between 600 and 700 million ounces over the last 2.5 years from the West, right? Yeah, huge, because that's 10 times the amount of silver in the registered category. We're supposed to be told that there's 800 million ounces on the LBMA, of which only 300 million is unencumbered, 500 plus belongs to the ETFs. That's also the platform, as we've talked about, that trades 2.9 billion ounces per day, 10 times the 292 million that they post. They admit those numbers are 10 times understated. You're talking 3.5 times annual global mine supply traded per day on these Western exchanges, which gives all of these countries, what did I say they're doing? Standing for delivery. They know what we are doing, and they are standing for delivery. They are draining the exchanges, and now they're draining it off the Shanghai Metals Exchange, also continually draining the exchanges. But what did India do the other day? Well, India has this, India has this deal with the United Arab Emirates that is related to import taxes, import duties. They don't have to pay as much in the way of taxes when they work with the United Arab Emirates. And so listen to this. Now, I've been very vocal talking about the 600 to 700 million ounces they have imported over the last 2 to 3 years. But this is now, and again, you need to dig to find this stuff. You don't find this on Fox, or you have to dig, right? And anyways, and I wanted to mention a platform that when people, if they're really interested in getting some more truth, go to Yandex, Yandex, which is a much better search engine than Google or Baidu. These are Chinese and Russian search engines that will give you a much clearer understanding of what's happening. But anyways, suffice it to say, according to India's silver imports from the United Arab Emirates, from January to April of 2023, they were only $2.2 million worth. And now, from the same time period in 2024, $1.44 billion worth of silver, which is an increase of 654 times, 654-fold increase year over year. They now just imported all of that silver from the United Arab Emirates. And is that calculated in does anyone know how much?
To truly understand the forces driving silver's potential price explosion, we need to delve into the current market trends shaping its demand. Silver's unique position as both a precious metal and an industrial commodity means that its price is influenced by a complex interplay of factors, making it a compelling investment choice in today's economic landscape. One of the most significant trends impacting silver demand is its extensive use in industrial applications. Silver is indispensable in various high-tech industries, including electronics, renewable energy, and automotive sectors. Notably, the photovoltaic, solar energy sector has become a major consumer of silver. In 2023 alone, silver's use in solar power grew by an astounding 64%. This surge is driven by the global shift towards renewable energy sources, with solar panels requiring significant amounts of silver for their conductive properties. As countries worldwide commit to reducing carbon emissions and increasing their renewable energy capacities, the demand for silver in the solar industry is expected to continue its upward trajectory. This trend is not just a short-term phenomenon, but a long-term structural shift that will sustain high levels of silver demand for years to come. Another critical factor is the persistent supply deficit in the silver market. Since 2019, the silver market has experienced a consistent supply shortfall, with demand outstripping supply year after year. This deficit is projected to widen further in 2024, exacerbating the pressure on silver prices. The combination of robust industrial demand and limited supply creates a perfect storm for significant price increases. Several factors contribute to this supply deficit. On the supply side, silver production has declined globally, with fewer new mining projects coming online and existing mines facing lower yields. Additionally, regulatory and environmental challenges have made it more difficult for mining companies to expand production. On the demand side, the relentless growth in industrial applications, coupled with strong investment demand, continues to push the balance further into deficit. Investment demand for silver is also on the rise, driven by both retail and institutional investors. While demand for silver bars and coins might see a slight reduction in 2024, institutional investors are expected to significantly increase their holdings, adding over 50 million ounces to their portfolios. This surge in institutional interest underscores the growing recognition of silver as a strategic asset. China, in particular, has shown a growing appetite for silver, with significant increases in both private and public sector investments. This trend is mirrored in other major economies, where investors are seeking safe haven assets amidst economic uncertainty and inflationary pressures. The increased allocation to silver by institutional investors not only supports current price levels, but also sets the stage for future price appreciation. The broader economic conditions further bolster silver's investment case. With global economies grappling with inflation, economic shocks, and geopolitical tensions, silver's role as a safe haven asset becomes even more pronounced. Interest rate cuts, particularly by major central banks like the U.S. Federal Reserve, tend to benefit silver prices. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making it a more attractive investment. Moreover, in times of economic instability, investors flock to tangible assets like silver to protect their wealth. This flight to safety is driven by the desire to hedge against currency devaluation, stock market volatility, and other financial uncertainties. As a result, silver's demand as a store of value increases, further supporting its price. In conclusion, the current market trends highlight a confluence of factors driving silver demand to unprecedented levels. From its critical industrial applications to the persistent supply deficit and growing investment demand, silver is poised for a significant price surge. As we continue to explore these dynamics, you'll see why experts believe that silver's future is exceptionally bright.
Glad you brought that up. Thank you. You know, we talk about one of the things that has been a hot topic lately, which I look at as complete phooey, is China stopping to buy. They stopped buying gold, right? They didn't buy gold for a month, and which is a bunch of nonsense. Because look, my whole career, my entire career, everyone said the numbers that China reports as having as their gold stockpile is a lie, because it was like at 1,200 metric tons forever, and for years and years and years, never changed. Yet there are people who tell you they mine between 400 and 500 metric tons per year every year. They're the largest producer in the world and have been mining uneconomical gold forever, right? And so just that alone is massively significant. But they have entities in China that, you know, that they're not. These are banks that are not reporting to the IMF their gold holdings, like ICBC as a proxy for which is a state-owned bank, as a proxy for the PBOC, which is accumulating gold hand over fist, dealing with the refineries in South Africa and Switzerland, not reporting it. If gold that they accumulate is under 9995 pure, they don't report it. Just like we haven't updated our numbers since 1953, they're not going to update their numbers. But it would certainly behoove them to maximize the amount of gold they get before it gets revalued, like we talked about earlier. Remember, revalued. So they're not going to tell the world, yeah, we're buying it hand over fist. In fact, let's just tell them we're not buying it. And you guys, our state-owned banks, quietly, go start buying it. We're going to tell them that we stop for a month. The prices will fall because the Western media, a bunch of idiots, and the price will fall, and we can buy some more cheap and start getting more cheap on behalf of the idiots in the West who dropped the price. Okay, fine. Well, what I would also say is everyone focuses on
The supply deficit in the silver market is a critical factor that cannot be overstated. Since 2019, the silver market has been grappling with a persistent and widening supply shortfall. This means that the demand for silver has consistently outpaced the available supply, creating a significant imbalance that exerts upward pressure on prices. Several factors contribute to this ongoing supply deficit. On the production side, global silver output has been declining. Many of the world's major silver mines are experiencing reduced yields due to the depletion of high-grade ores. This decline in production is further exacerbated by the lack of new mining projects coming online. The process of discovering, developing, and bringing new mines into production is lengthy and capital-intensive, often taking several years to a decade. As a result, the pipeline of new silver production is not keeping pace with the increasing demand. Environmental regulations and political challenges also play a role in limiting silver supply. Mining operations face stricter environmental standards and community opposition, which can delay or halt projects. In some regions, political instability and regulatory uncertainties make it difficult for mining companies to operate efficiently, further constraining supply. On the demand side, the situation is equally compelling. The industrial applications of silver are expanding rapidly, particularly in sectors like renewable energy, electronics, and automotive industries. The photovoltaic sector, which includes solar panels, is a significant driver of this demand. As countries strive to meet their renewable energy targets, the use of silver in solar panels has surged. In 2023, silver's use in solar power grew by 64%, and this trend shows no signs of slowing down. Moreover, the automotive industry is increasingly reliant on silver for various components, including electrical connections, switches, and even batteries. As the world transitions to electric vehicles, EVs, the demand for silver in this sector is expected to rise significantly. In addition to industrial demand, investment demand for silver is also on the rise. Retail and institutional investors are flocking to silver as a safe haven asset in times of economic uncertainty. The growing interest from institutional investors is particularly noteworthy. In 2024, institutional investors are expected to increase their silver holdings by over 50 million ounces. This influx of investment demand further tightens the supply-demand balance. China, one of the world's largest consumers of silver, continues to show a strong appetite for the metal. Both private and public sector investments in silver are rising, driven by the need to secure raw materials for industrial use, and as a strategic investment to hedge against economic risks. The persistent supply deficit has profound implications for silver prices. When demand consistently outstrips supply, it creates upward pressure on prices as buyers compete for limited available stocks. This dynamic is a fundamental principle of economics. Scarcity drives value. As the supply deficit widens, the pressure on prices intensifies, making significant price increases more likely. Experts predict that this supply deficit will continue to grow in the coming years. As industrial applications expand and investment demand remains robust, the gap between supply and demand is expected to widen further. This scenario sets the stage for a potential surge in silver prices, with some analysts projecting prices to exceed $1,000 per ounce in the near future. In conclusion, the silver market's supply deficit is a critical driver of potential price increases. The combination of declining production, increasing industrial applications, and robust investment demand creates a perfect storm for silver prices to rise. Understanding this supply-demand imbalance is crucial for investors looking to capitalize on the future potential of silver. As we continue our exploration, we'll delve deeper into the insights of industry experts and their predictions for silver's future.
The exchange. Moscow seeks to move away from trading grain for U.S. dollars in favor of the national currencies of the BRICS member states. The ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of the agricultural commodities critical for their food security. The BRICS commodity exchange will solve this problem. But this is the point here. The same thing will be true. Look, they now have a commodity exchange, which would be for things like corn and soybean and wheat. Well, what's Brazil doing right now? They're the second largest exporter of corn in the world. They're selling corn and soybeans to China for yuan over the Project M Bridge, sidestepping SWIFT and probably sending that yuan back and converting it into gold on the Shanghai Gold Exchange. Probably those same kilo bars that came off the COMEX. So they're doing that. But what did China do? They bought the LME, the London Metals Exchange, the base metals, right? We've talked about how all of the countries joining the BRICS or the Shanghai Cooperation Organization or the Belt Road Initiative are massively rich in commodities, right? So they're buying the LME, which is base metals. They're draining the exchange in precious metals. And by the way, the LME, which the Chinese own, even though the exchange is in the UK, they're now building warehouses in China to warehouse the metals that are traded on the LME in China. So they're knee deep in base metals, copper, zinc, all that kind of stuff. They are building a grain exchange. There was a report that JP Morgan just came out with, said that they produce 70 to 80% of all the rare earth metals, but they refine 100% of all the rare earth metals. So you got that base covered. They came out and said that this new BRICS endeavor those countries that will be admitted in October will be.
To gain deeper insights into the dynamics of the silver market, we turn to the expertise of industry leaders who have closely analyzed the factors driving demand and supply. Michael DiRienzo, CEO and president of the Silver Institute, is one such expert who provides valuable perspectives on the current market conditions. DiRienzo emphasizes the primary drivers behind the silver market deficit: record industrial demand coupled with lower mine supply. He highlights that the increasing use of silver in industrial applications, particularly in renewable energy and electronics, is pushing demand to unprecedented levels. This, combined with the declining output from existing mines, creates a significant supply shortfall. DiRienzo also underscores the importance of institutional investment in propelling silver prices higher. Institutional investors, recognizing silver's potential as both a hedge against economic instability and a high-return investment, are increasing their holdings substantially. This influx of institutional demand not only supports current price levels, but also sets the stage for future price appreciation. DiRienzo predicts that economic shocks and interest rate cuts by major central banks, such as the U.S. Federal Reserve, will further benefit silver prices. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making it more attractive to investors seeking stability amidst economic turbulence. Another key expert, Nicholas Frappel, global head of institutional markets for ABC Refinery, provides additional insights into silver's industrial uses and future demand. Frappel emphasizes that silver's role in industrial applications extends beyond renewable energy. Silver is crucial in the catalysis of ethylene oxide, a chemical used in producing various consumer goods, and in the manufacture of electronics and medical devices. These diverse applications ensure a steady and growing demand for silver, independent of its use as a precious metal. Frappel believes that silver will continue to perform strongly in bull markets, driven by its unique properties and industrial importance. He predicts that as the global economy recovers and industrial activities ramp up, silver's demand will rise correspondingly. This robust industrial demand, coupled with strong investment interest, creates a powerful combination that can drive silver prices to new heights. These expert opinions align with the broader market analysis and underline the critical role of industrial demand and institutional investment in shaping silver's future. The insights from D'Arienzo and Frappel provide a comprehensive understanding of the complex factors at play and reinforce the bullish outlook for silver. As we continue our exploration, it becomes clear that the confluence of industrial applications, supply constraints, and growing investment demand positions silver for a significant price surge. Understanding these expert perspectives helps investors navigate the silver market with greater confidence and anticipation of the opportunities ahead.
Simply say this, if you have an IRA order and you bought quarter-ounce gold coins that were between $800 and $1,200 and silver coins north of 60, you've been screwed, period. I mean, that's just, there is no other way to say it. And these companies are really good at it. So you can always send us an email. We've become pretty good at helping people understand what they have. And to your point, that client, called the attorney general, and there's nothing wrong with doing that. You've been wronged. And if you look at the price that they were paid, and then if you look at the price people have paid for quarter-ounce gold coins and look at the spot price right now, divide by 4, we're pretty damn close to all-time highs, and you're still a couple $100 away, you've been screwed. And there is no reason you shouldn't get really angry and try and do something about it. I've gotten to the point now where it just makes me so furious, and I wish I could debate these companies in public forum. I wish I could mention their names. I'd like to, but I don't. Same reason you don't. But the more that I've seen real life examples of this and how they've decimated people, the more it just becomes really, really gross and really, really aggravating and sad. And I don't know, Dunnigan, it's one of the worst things I've ever seen in my career, and it's everywhere. These companies are very good at marketing and persuasive to people who don't know better. So the one thing I would also say is, if you have fallen victim to this, don't feel bad. These people are really good at what they do, and it's criminal as far as I'm concerned. There is no ethics in anything they're doing. So I'm glad you brought it up. It's something that's very near and dear to me, and we and try and help people see where they are, and we do it with class. We could sit here and mention the names of, I can think of 5 names right now. I could spit a bang, 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 and every one of them have the same model. But I think all you got to do is realize they all follow the same ridiculous path of quarter-ounce gold coins at a ridiculous premium and silver coins at a ridiculous premium. And
institutional investment plays a pivotal role in the dynamics of the silver market, significantly influencing its price and demand. Over recent years, there has been a notable increase in institutional interest in silver, driven by its potential as a strategic asset and a hedge against economic uncertainty. This growing institutional investment is one of the key factors that could propel silver prices to new heights. Institutional investors, such as hedge funds, mutual funds, and large asset managers, have begun to recognize the unique advantages that silver offers. Unlike retail investors, who may buy physical silver in the form of coins or bars, institutional investors typically invest through financial instruments such as exchange-traded funds, ETFs, futures contracts, and large-scale physical purchases. This influx of institutional capital has a substantial impact on the market due to the sheer volume of their investments. In 2024, institutional investors are expected to increase their silver holdings by over 50 million ounces. This significant increase in demand from institutional players underscores their growing recognition of silver as a valuable addition to their investment portfolios. The reasons behind this surge in institutional interest are manifold. Firstly, silver's dual role as both a precious metal and an industrial commodity makes it an attractive diversification tool. It offers protection against inflation and currency devaluation, while also benefiting from industrial demand growth. One notable example of this trend is the increased allocation to silver ETFs. These funds, which pool investor money to purchase physical silver, have seen substantial inflows. This trend is particularly evident in major markets such as the United States and Europe, where where institutional investors are seeking to diversify their portfolios amidst economic volatility. The rise in ETF holdings reflects broader investor confidence in silver's long-term prospects and its ability to deliver strong returns. China, as a major player in the global economy, has also shown a growing appetite for silver. Both private and public sector investments in silver are on the rise, driven by the need to secure raw materials for industrial use and as a strategic investment to hedge against economic risks. Chinese institutional investors are increasingly recognizing the strategic importance of silver, further bolstering its demand. The impact of institutional investment on silver prices cannot be overstated. When large-scale investors enter the market, their significant capital inflows create upward pressure on prices. This dynamic is evident in the recent price movements, where increased institutional buying has contributed to the overall bullish sentiment. As more institutional investors turn to silver, the competition for available supply intensifies, further driving up prices. Moreover, the broader economic conditions play a crucial role in shaping institutional investment strategies. In times of economic uncertainty, low interest rates, and high inflation, silver becomes an attractive asset for preserving wealth. Major central banks, such as the U.S. Federal Reserve, are expected to maintain lower interest rates, reducing the opportunity cost of holding non-yielding assets like silver. This economic backdrop supports the case for increased institutional investment in silver as a hedge against economic instability. In conclusion, the growing interest from institutional investors is a significant driver of silver demand and price. The substantial increase in institutional holdings, coupled with favorable economic conditions, positions silver for a potential price surge. As institutional investors continue to recognize the strategic value of silver, their increased participation in the market will likely propel prices higher. Understanding the role of institutional investment provides crucial insights into the future potential of silver as a high-performing asset.
2 times over the last few months, it's now becoming a reality. And it's you need to understand, you need to listen to the verbiage here in the statement, because it's the exact same thing that they understand with the commodity markets. And this is why we're seeing so many deliveries. And I'll answer this question in a moment, but just like we're seeing all of the gold heading to Hong Kong. Remember, the CME Group created a contract in 2015 that allows for exchange for physical to be delivered to Brinks, Hong Kong, which is a COMEX vault. And they only keep taking kilo gold bars, ironically. No, it's not, because the Shanghai Gold Exchange trades in kilo bars. The COMEX trades in 100-ounce bars, although their mini contract is kilo bars. So when you see, 500+ million in gold delivered to Brinks, Hong Kong in an exchange for physical, that's being trucked over to the Shanghai Gold Exchange. They are using the suppression of the Western market against us and standing for delivery. We just saw the other day another huge delivery coming out of the June contract for gold. It was 30,000 gold contracts were delivered off of COMEX in the June contract, 30,000 times 100 ounces. We continue to see drawdowns in the exchanges because the world understands this is how they win the game. The countries that are standing for delivery now never did. It is the standing for delivery, the coordination, sophistication, wealth, being cunning enough and understanding enough to understand this is how you beat the West, by standing for delivery in these exchanges. Well, the same thing would be true in respect with the BRICS Grain Exchange. And I'm going to read something to you here so people understand, they get what's happening, and they're using this leverage against us. They say the BRICS Grain Exchange is likely to change the face of the world grain market tremendously. And this is according to the Russian officials. The existing global grain market infrastructure was formed following the Second World War, when U.S. wheat and corn exports dominated the market, the ministry said. Although U.S. exports no longer play the role they used to, global prices are primarily determined by the Chicago commodity.
The broader economic conditions are crucial in understanding why silver is positioned for a significant price increase. In times of economic uncertainty, silver's appeal as a safe haven asset becomes particularly pronounced. Investors flock to tangible assets like silver to protect their wealth against various economic risks, such as inflation, currency devaluation, and stock market volatility. This trend is especially relevant in the current global economic climate. One of the primary economic factors influencing silver's bullish outlook is the prevailing low interest rate environment. Major central banks, including the U.S. Federal Reserve, have maintained historically low interest rates to support economic growth. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making it a more attractive investment. When interest rates are low, the returns on bonds and other fixed income investments are less competitive, prompting investors to seek alternative assets that can offer better returns and preserve wealth. Inflation is another critical factor driving demand for silver. As economies around the world grapple with rising prices, the need to hedge against inflation becomes paramount. Silver, like gold, has a long history of serving as an effective hedge against inflation. Historical data shows that silver prices tend to rise during periods of high inflation, as investors turn to precious metals to preserve their purchasing power. This inflation hedging quality makes silver an attractive option for investors looking to safeguard their wealth in an environment of rising prices. The ongoing economic instability and geopolitical tensions further enhance silver's safe haven appeal. In times of crisis, such as financial downturns, political unrest, or global pandemics, investors seek refuge in assets that are perceived as safe and stable. Silver, being a tangible asset with intrinsic value, provides a sense of security that paper assets cannot. This flight to safety drives up demand for silver, pushing prices higher. Additionally, the potential for economic shocks, such as sudden changes in monetary policy or unexpected geopolitical events, adds to the attractiveness of silver. Investors seek to mitigate the risks associated with such shocks by diversifying their portfolios with assets that can withstand economic turbulence. Silver's dual role as both an industrial commodity and a precious metal offers a unique combination of stability and growth potential, making it an ideal choice for risk-averse investors. The correlation between silver and the stock market also plays a significant role in its investment appeal. Unlike other precious metals, silver often performs well when the stock market rises, due to its industrial demand. This positive correlation provides investors with a diversified risk profile, allowing them to benefit from silver's growth potential even in a bullish stock market environment. Moreover, the potential for interest rate cuts by major central banks, particularly the U.S. Federal Reserve, is likely to benefit silver prices further. Lower interest rates not only reduce the opportunity cost of holding silver, but also stimulate economic activity, leading to increased industrial demand for the metal. This dual impact of interest rate cuts supports the bullish case for silver. In summary, the current economic conditions create a favorable environment for silver as a safe haven asset. Low interest rates, rising inflation, economic instability, and potential economic shocks drive investors towards silver as a reliable store of value. These factors, combined with silver's unique industrial demand, position it for significant price appreciation. As we continue to explore the dynamics of the silver market, the influence of these economic conditions becomes increasingly clear, reinforcing the bullish outlook for silver in the coming years.
No matter what they say to you about this answer, they're lying. Go to every other website online and see if you can find the product they're trying to sell you. You won't. And then they'll try and tell you, well, that's why it's rare, it's limited, you'll make a huge profit. Yeah, hogwash. The bid on that stuff is spot or less. It's back a melt because no one holds this stuff. No one buys this stuff. And when you run a business, there's something called the cost of carry. Like if at a grocery store I'll never forget, I used to be a bag boy at a grocery store when I was 15, and a fancy grocery store in Minneapolis. It was called Byerly's. And it was, they had chandeliers and carpet running through the place. And it was a brand new idea that started in Minneapolis, these upscale grocery stores. And they would have tour buses with Japanese folks who would come out with cameras and walk through. And it was just this novel place. They had chocolate covered baby bees, real bees, chocolate covered baby bees in a can. I'll never forget. And I was stocking this stuff and thinking, who the heck would ever buy this? No one ever did buy this. It just sat there. It sat there. It sat there. And then finally it stopped carrying chocolate covered baby bees. I can't imagine anyone would eat a baby bee covered in chocolate. But the point of it is that the cost of carry, that space on the shelf, it collected nothing but dust. Same thing is true here. When you buy this stuff back, helping people out, if that's what we're going to do, the dealers in the country will bid back a spot because of the cost of carry. No one buys it. No one even knows what it is. Yet these companies are trying to tell people these are special coins that will net you huge profits. And then they show you these hypotheticals. This is what your thing is worth, knowing that keeps people from cashing out. It's really, really gross is the only way that I can put it. And the amount of commissions these companies are making, I would have been retired years ago if that were the case. Because in this industry, that those kind of profits they don't exist unless, of course, you're doing something which I believe to be completely and totally off board, unethical, and if I were being honest, I would say should be criminal. And that's the honest truth. Not trying to elevate myself. If I would do that, I would mention these companies because I can, but I don't. But it's really wrong. And I wonder how these people continue to look their mom and dad in the face, because if mom and dad got screwed the way that other moms and dads have been, then it's a whole different thing, right? But anyways, we all have to meet our maker someday, I guess. Anyways, I'm glad you brought it up. It's something we're...
When comparing silver with gold, several compelling factors emerge that make silver a particularly attractive investment in the current economic climate. While gold has long been regarded as the premier safe haven asset, silver's unique characteristics and recent market trends suggest it might offer even greater potential for returns. Understanding these differences can help investors make more informed decisions about where to allocate their resources. Firstly, silver is often referred to as gold's cheaper cousin, but this characterization understates its value. One of the most significant advantages of silver over gold is its affordability. Silver is considerably less expensive per ounce than gold, which makes it accessible to a broader range of investors. This lower price point allows investors to acquire larger quantities of silver, potentially amplifying their gains as the price increases. For instance, while gold might be out of reach for some investors, silver provides an affordable entry point into the precious metals market. Moreover, the gold-to-silver ratio, GSR, provides valuable insights into the relative value of these two metals. The GSR measures how many ounces of silver are equivalent to 1 ounce of gold. Historically, the GSR has fluctuated, but recent values suggest that silver is undervalued relative to gold. As of June 2024, the GSR closed at 75, indicating that silver might have more room to appreciate compared to gold. Historically, periods with a high GSR have often been followed by significant outperformance of silver, making it a potentially lucrative investment. Another critical factor is silver's industrial demand, which differentiates it from gold. While gold is primarily used for investment in jewelry, silver has extensive industrial applications. Silver's superior conductivity, reflectivity, and antimicrobial properties make it indispensable in various industries, including electronics, solar energy, and medical devices. The photovoltaic, solar energy sector, in particular, has seen a substantial increase in silver usage. In 2023, silver's use in solar power grew by 64%, driven by the global push towards renewable energy. This robust industrial demand provides a steady and growing base for silver, independent of its use as a precious metal. Additionally, the automotive industry is another significant driver of silver demand. As the world transitions to electric vehicles, EVs, the need for silver in automotive components is expected to rise significantly. Silver is used in various electrical connections and switches in vehicles, and the shift towards EVs will only amplify this demand. This industrial demand, coupled with investment demand, creates a dual force that supports silver prices. Investment strategies also highlight the advantages of silver over gold. Silver has historically outperformed gold in bull markets, delivering average returns of 384% compared to gold's 114%. This outperformance is partly due to silver's smaller market size, which makes it more volatile and responsive to market dynamics. In times of economic recovery or bullish sentiment, silver's price movements can be more pronounced, offering higher returns to investors who are willing to embrace this volatility. Inflation is another area where silver shines. Both gold and silver are considered effective hedges against inflation, but silver's performance during inflationary periods is particularly noteworthy. Historical data shows that silver has delivered average gains of more than 17% in years where inflation averaged 3% or more. This inflation hedging quality makes silver an attractive option for investors looking to protect their wealth from the erosive effects of rising prices. In conclusion, while gold remains a reliable safe haven asset, silver offers unique advantages that make it an attractive investment in the current economic climate. Its affordability, industrial demand, historical outperformance in bull markets, and effectiveness as an inflation hedge position silver as a compelling choice for investors. As we delve deeper into the dynamics of the silver market, it becomes clear that silver's potential for significant price appreciation is supported by a robust combination of factors, making it a standout investment opportunity.
Simply say this. If you have an IRA order and you bought quarter ounce gold coins that were between $800 and $1,200 and silver coins north of 60, you've been screwed, period. I mean, that's just, there is no other way to say it. And these companies are really good at it. So you can always send us an email. We've become pretty good at helping people understand what they have. And to your point, that client, called the attorney general, and there's nothing wrong with doing that. You've been wronged. And if you look at the price that they were paid, and then if you look at the price people have paid for quarter ounce gold coins and look at the spot price right now, divide by 4, we're pretty damn close to all-time highs, and you're still a couple $100 away, you've been screwed. And there is no reason you shouldn't get really angry and try and do something about it. I've gotten to the point now where it just makes me so furious, and I wish I could debate these companies in public forum. I wish I could mention their names. I'd like to, but I don't. Same reason you don't. But the more that I've seen real life examples of this and how they've decimated people, the more it just becomes really, really gross and really, really aggravating and sad. And I don't know, Dunnigan, it's one of the worst things I've ever seen in my career, and it's everywhere. These companies are very good at marketing and persuasive to people who don't know better. So the one thing I would also say is, if you have fallen victim to this, don't feel bad. These people are really good at what they do, and it's criminal as far as I'm concerned. There is no ethics in anything they're doing. So I'm glad you brought it up. It's something that's very near and dear to me, and we like and try and help people see where they are, and we do it with class. We could sit here and mention the names I can think of 5 names right now. I could spit a bang, 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 and every one of them have the same model. But I think all you got to do is realize they all follow the same ridiculous path of quarter ounce gold coins at a ridiculous premium and silver coins at a ridiculous premium. And
the growth of industrial demand for silver is one of the most compelling reasons why this precious metal is poised for significant price appreciation. Silver's unique physical and chemical properties make it an essential component in various industrial applications, driving substantial and sustained demand across multiple sectors. One of the most significant industrial uses of silver is in the photovoltaic, solar energy sector. Silver's excellent electrical and thermal conductivity makes it a critical element in the production of solar panels. As the world transitions towards renewable energy sources to combat climate change, the demand for solar panels has skyrocketed. In 2023, the use of silver in solar power applications grew by an impressive 64%. This trend is expected to continue as countries worldwide strive to meet their renewable energy targets. The International Energy Agency, IEA, predicts that solar power capacity will increase dramatically in the coming decades, further boosting silver demand. The electronics industry is another major driver of silver demand. Silver's superior conductivity, reflectivity, and durability make it indispensable in the manufacture of electronic devices. It is used in various components, including connectors, switches, and circuit boards. As technology advances and the proliferation of electronic devices continues, the demand for silver in this sector is set to grow. The rise of the Internet of Things, IoT, 5G networks, and the increasing use of silver in advanced medical devices further underscore its importance in the electronics industry. The automotive sector is also significantly contributing to the rising demand for silver. The shift towards electric vehicles, EVs, is accelerating as governments and consumers seek cleaner transportation options. Silver is used in numerous electrical components within vehicles, including wiring, connectors, and battery management systems. As the production and adoption of EVs increase, so too will the demand for silver. According to industry forecasts, the global electric vehicle market is expected to grow exponentially over the next decade, driving up the need for silver in automotive applications. Furthermore, silver's antimicrobial properties are being leveraged in the medical and healthcare industries. Silver is used in various medical applications, including wound dressings, surgical instruments, and medical devices, due to its ability to kill bacteria and prevent infections. The growing awareness of these properties, especially in light of the COVID-19 pandemic, has spurred further research and application of silver in healthcare settings. The growing industrial demand for silver is not just a short-term trend, but a long-term structural shift. This sustained demand is underpinned by global technological advancements and the transition towards a greener economy. The combination of these factors creates a robust foundation for silver's price appreciation. Moreover, the increasing industrial demand exacerbates the existing supply deficit in the silver market. As discussed earlier, the supply of silver has been constrained by declining production and regulatory challenges. The growing industrial applications add further pressure to the already tight supply, creating a perfect storm for significant price increases. In conclusion, the growth of industrial demand for silver is a key driver of its bullish outlook. The expanding use of silver in renewable energy, electronics, automotive, and medical industries ensures a steady and growing demand base. This industrial demand, coupled with the existing supply deficit and increasing investment interest, positions silver for substantial price appreciation. As we continue to explore the factors influencing the silver market, the critical role of industrial demand becomes increasingly clear, reinforcing the optimistic projections for silver's future.
Show their face. No one knows who owns these big companies, and I know the ones from which you speak, and here's what they do. They sell you quarter-ounce gold coins and they're always quarter-ounce gold. I can't figure that one out so well, but they range between $800 and $1,200 a piece. I've never sold a quarter-ounce coin that high ever, maybe a quarter-ounce $5 Liberty in a high grade, pre-33, but a gold bullion coin from typically from a established mint, but quarter-ounce coins that no one else in the country is selling. See, they're very rare. They're hard to find. They make huge profit potential. Trust me, sir. Trust me. And these quarter-ounce coins are marked up so much it's absolutely ridiculous. And silver coins that will be between 60 and 90 a piece, or 2-ounce coins, 120. They're repugnant. These companies, they know exactly what they're doing. I don't know how these people sleep at night, but it is always the same thing, and I get it every single day. And it's heartbreaking. They prey upon people's IRAs, which in and of itself is criminal because people have worked their whole lives to put money away to buy gold to protect themselves, reluctantly preparing, as you and I always joke about, and they think they're buying gold and they're talked into buying this nonsense. The third category could be proof coins. Again, nonsense. Lipstick on a pig. If you want to buy proof coins, you can buy a few of them, but understand that it is not the vanilla in the vanilla ice cream. It is that's a collectible. You want things that are rich in content, like gold eagles, gold maple leafs, gold bars, silver, and same thing in silver. You want just generic things, but the $10,000 in free silver and gold is even more a joke. Yeah. So, okay, fine. We sell you 1-ounce silver coins at $65 a piece and then give you $10,000 free in that. But the thing is there's 100% markup in that stuff. It's absolutely a joke. And they're making such a massive markup that when you figure out exactly how much they're actually giving you, a couple 300 ounces or so of silver, 200 ounces, whatever it is, it costs them $4,000 or $5,000, whatever the number is. But they're making multiples of that when they're selling you this nonsense. And
Various experts and analysts have made bold predictions about silver's potential price trajectory, and the consensus is clear. Silver is poised for a significant surge. These price predictions are grounded in a thorough analysis of market fundamentals, including the persistent supply deficit, robust industrial demand, and increasing investment interest. Michael DiRienzo, CEO and president of the Silver Institute, is among those who foresee a bullish future for silver. He highlights the ongoing supply constraints and rising industrial demand as critical factors that will drive prices higher. DiRienzo predicts that silver prices could exceed $50 per ounce in the near term, especially if current trends in renewable energy and electronics continue unabated. Nicholas Frappel, global head of institutional markets for ABC Refinery, shares a similarly optimistic outlook. He emphasizes that silver's role in industrial applications will be a major driver of future price increases. Frappel projects that silver could reach new all-time highs, potentially surpassing $100 per ounce, as the demand from sectors like solar power and electric vehicles continues to grow. Another notable prediction comes from Jordan Alisio, general manager of ABC Bullion Australia. In his report, A Sterling Investment, Alisio outlines how silver has historically outperformed other precious metals in bull markets and expects this trend to continue. He forecasts that silver prices could hit between USD $40.50 and USD $48 per ounce in the next few years, driven by the combination of industrial demand and investment interest. The investment community also echoes these sentiments. Hedge fund managers and financial analysts are increasingly recognizing silver's potential for significant gains. For instance, analysts from major financial institutions predict that silver prices could rise sharply as global economic conditions remain favorable for precious metals. They point to factors such as low interest rates, high inflation, and geopolitical uncertainties as key drivers that will support higher silver prices. One of the most bullish forecasts comes from independent analyst and investor David Morgan. Known as the silver guru, Morgan predicts that silver could reach unprecedented levels, potentially exceeding $1,000 per ounce in the long term. His analysis is based on the premise that the current economic and industrial trends will continue to accelerate, creating an environment where silver demand far outstrips supply. Morgan argues that as more investors seek safe haven assets and industrial demand remains robust, silver prices will experience a dramatic upward shift. These expert predictions are not merely speculative, they are rooted in concrete market data and trends. The persistent supply deficit, driven by declining mine output and increasing regulatory challenges, creates a scarcity that naturally pushes prices higher. Meanwhile, the expanding industrial applications of silver, particularly in renewable energy and electronics, ensure a steady and growing demand base. Moreover, the increasing investment demand from both retail and institutional investors adds another layer of support for higher prices. As investors seek to diversify their portfolios and hedge against economic uncertainties, silver becomes an attractive option. This growing interest is reflected in the rising holdings of silver ETFs and increased physical purchases by large investors. In summary, the price predictions for silver are overwhelmingly positive, with experts forecasting significant gains in the coming years. These projections are based on a robust analysis of market fundamentals, including supply constraints, industrial demand, and investment interest. As we approach the final part of our discussion, it becomes clear that silver is positioned for a substantial price increase, driven by a confluence of favorable factors. Understanding these predictions helps investors appreciate the potential for significant returns in the silver market.
That's the point. But, the head of the Dutch National Bank really inspired my thinking on this. So follow me on this for a moment. The head of the Dutch National Bank said, our balance sheet is going negative, but I really don't worry too much about it because we have the gold and the gold revaluation account. And although we can't use it as an asset against a liability, we know it's there. Now, basically first of all, let me clarify. Gold held in central bank balance sheets is called the gold revaluation account. It's in the gold revaluation account, which is a very interesting name for an account for which they hold all of their gold. What Roosevelt did over my shoulder, he revalued gold by devaluing the dollar. And I find it interesting that so many of these central banks are accumulating gold at the level that they are, along with accumulating so much debt at the same time. Massive amounts of debt, massive amounts of gold accumulation. And there's one other piece, and that is, 30 countries or so who have repatriated their gold from the epicenters of usually considered safety. That would be the Bank of the Federal Reserve Bank in New York and the Bank of England, which would by proxy give access to the COMEX and the metals exchange in London, the LBMA. And if you think about it, now that we've been told that the new unit currency, which is the BRICS default currency, which it looks like they are going to run with, according to Delma Rousseff, the head of the BRICS New Development Bank, realizing that Project Enbridge is the vehicle by which they'll trade. And who's part of the Project Enbridge? The Bank of International Settlements. What did the Bank of International Settlements do? Oh, that's right. They reclassified gold as the world's only other tier 1 reserve asset. Now follow me here. It would just seem likely to me that all of these countries who have been told not only to buy gold, and if you go back,
determining how much silver one should hold to be safe from a recession involves a careful consideration of various factors, including your financial situation, investment goals, and the economic conditions you anticipate. Silver is an excellent hedge against economic downturns, but it should be part of a diversified investment portfolio rather than the entirety of your holdings. Before making a decision, it's crucial to assess your overall financial health and investment objectives. Silver should complement other assets in your portfolio, such as stocks, bonds, and real estate, to provide a balanced approach to wealth preservation and growth. Financial advisors typically recommend that precious metals, including silver, comprise between 5% to 10% of your total investment portfolio. This allocation offers enough exposure to benefit from potential price increases while maintaining diversification across other asset classes. To illustrate, let's consider an example where you have an investment portfolio worth $100,000. Allocating 5% to 10% of this portfolio to silver would mean investing between $5,000 and $10,000. Given the current price of silver at approximately $25 per ounce, this investment would translate to owning between 200 to 400 ounces of silver. For the lower end of the spectrum, with the 5% allocation, you would purchase about 200 ounces, whereas a 10% allocation would increase your holdings to around 400 ounces. While the 5% to 10% range provides a good starting point, personal factors can influence this decision. If you are particularly risk-averse or have significant concerns about economic instability, you might consider increasing your allocation slightly above this range. Conversely, if you have a higher risk tolerance or a more diverse portfolio with substantial investments in other asset classes, you might opt for the lower end of the range. Economic conditions also play a crucial role in determining your allocation to silver. In times of severe economic downturns or high inflation, increasing your allocation to silver can be prudent. During periods of high inflation, silver prices tend to rise as investors seek to protect their purchasing power. In such scenarios, allocating up to 15% of your portfolio to silver might be appropriate to ensure adequate protection. It's also essential to balance your precious metals portfolio between silver and other metals like gold. Gold is often considered a more stable store of value, while silver offers higher volatility and potentially greater returns due to its industrial demand. For instance, if you decide to allocate 10% of your $100,000 portfolio to precious metals, you might invest 2/3 of that amount in gold and 1/3 in silver. This approach provides stability through gold and growth potential through silver. In this case, you would invest about $6,666 in gold and $3,334 in silver, resulting in approximately 133 ounces of silver at $25 per ounce. When holding physical silver, it's important to consider storage options to ensure its safety. You can choose to store your silver at home in a secure safe, use a bank safety deposit box, or opt for professional vault storage services. Each option comes with its own costs and benefits, so select one that aligns with your security needs and budget. Finally, regularly reviewing your portfolio and adjusting your allocations as needed is crucial. Market conditions, economic forecasts, and personal circumstances can change over time, necessitating adjustments to maintain an optimal balance. Regular reviews help ensure that your portfolio remains aligned with your financial goals and risk tolerance. In conclusion, holding silver as part of your investment portfolio can provide a robust hedge against economic uncertainty and inflation. A general guideline is to allocate 5% to 10% of your portfolio to silver, but this can be adjusted based on personal factors and prevailing economic conditions. By carefully considering your financial situation, investment goals, and market dynamics, you can determine the appropriate amount of silver to hold, thereby protecting your wealth during a recession.
To 2017, as we've talked about, these banks have been massively accumulating gold, copiously so, for the past 8 years or so, and maybe longer, and or 7. Anyways, but repatriating their gold is just as big of a deal. We talked about India buying 1.5 times the amount of gold that they bought in all of last year, just in the first 4 months of this year, and repatriating it. All of the countries bringing their gold back from the New York Fed, including Saudi Arabia, who is a full participant in Project Enbridge. Now, follow me. I'm coming full circle with this. So you got a new system that we are being told will be tied to gold by 40%, and that will be the unit currency. And I suggest everyone even just go to the website, the unit website, and read their white paper. And then you have a new settlement platform, that being Project Enbridge, that will sidestep the SWIFT. So the unit is the settlement currency. Project Enbridge is the vehicle where each country can trade their own autonomous central bank currencies, having their own monetary policy, and yet settling in a common reserve currency. All of this points to lack of ownership in treasuries and accumulation in physical gold. If you read the white paper on the unit, it allows for each country to hold their gold in their own sovereignty, in their own borders, and have it audited, independently audited. This is why they're all bringing it home, because you can hold your gold according to the this new currency settlement, the unit, in your own borders, right? but it has to maintain this strict protocol and be audited. All right. So all of these countries accumulating gold at the same time, they know what's coming, so they're accumulating wicked amounts of debt, right? What did the guy say, the head of the central bank say for the Dutch National Bank? Oh, yeah, we're okay because we got the gold in the gold revaluation account. Kind of slipped there.
To wrap up our exploration of why silver demand is expected to far outstrip supply and push prices well past $1,000, let's consolidate the key factors that collectively build this compelling case. We delved into the persistent supply deficit, robust industrial demand, growing investment interest, and broader economic conditions, all of which contribute to silver's bullish outlook. The ongoing supply deficit in the silver market is a foundational element driving the price potential. With global silver production struggling to keep pace due to declining yields, regulatory hurdles, and political instability, the available supply of silver is continually under pressure. This scarcity creates a fertile ground for price increases as the demand for silver continues to rise unabated. Industrial demand, particularly from the photovoltaic, solar energy sector, electronics, and the automotive industry, is another critical driver. Silver's indispensable role in these sectors ensures a steady and growing demand. The transition to renewable energy sources, the proliferation of electronic devices, and the shift towards electric vehicles underscore the increasing necessity for silver. As these industries expand, the pressure on silver supply intensifies, pushing prices higher. Investment demand further amplifies silver's price potential. Institutional investors are increasingly recognizing silver's strategic value as a hedge against economic instability and inflation. The influx of capital into silver ETFs and physical purchases by large investors adds significant upward pressure on prices. As we've seen, institutional investors are expected to boost their silver holdings by over 50 million ounces in 2024 alone, reflecting their confidence in silver's future prospects. Broader economic conditions also play a pivotal role. In an environment characterized by low interest rates, high inflation, and economic uncertainty, silver's appeal as a safe haven asset becomes more pronounced. Investors seek refuge in tangible assets like silver to protect their wealth from the erosive effects of inflation and currency devaluation. Major central banks' monetary policies, particularly those of the U.S. Federal Reserve, support this trend by maintaining low interest rates, which reduce the opportunity cost of holding non-yielding assets like silver. Moreover, the historical performance of silver during bull markets and its effectiveness as an inflation hedge further strengthen its investment case. Silver has consistently outperformed gold in bull markets, delivering average returns of 384% compared to gold's 114%. This outperformance, coupled with silver's robust industrial demand and investment appeal, positions it for significant price appreciation. As we look ahead, the confluence of these factors suggests a highly favorable environment for silver. The persistent supply deficit, driven by declining production and rising industrial demand, creates a scenario where demand consistently outstrips supply. The growing interest from institutional investors and the supportive economic conditions further bolster silver's potential for substantial price increases. Experts and analysts have made bold predictions about silver's future, with some forecasting prices exceeding $50 per ounce in the near term, and others predicting long-term gains potentially surpassing $1,000 per ounce. These projections are grounded in a comprehensive analysis of market fundamentals, underscoring the robust case for silver. In conclusion, the combination of supply constraints, expanding industrial applications, increasing investment demand, and favorable economic conditions sets the stage for a dramatic surge in silver prices. As investors seek to safeguard their wealth and capitalize on growth opportunities, silver emerges as a standout investment. The factors we discussed not only justify the bullish outlook for silver, but also highlight its potential to exceed $1,000 per ounce, making it an essential asset for those looking to protect and grow their wealth in the face of economic uncertainties. Remember, while silver presents a compelling investment opportunity, it's crucial to diversify and consider your overall financial strategy. Stay informed, stay prepared, and consider how silver can play a strategic role in your investment portfolio. Thank you for watching, and if you found this analysis insightful, please subscribe to our channel for more updates and expert insights. And remember, this video is for informational purposes only and should not be considered financial or investment advice. Always consult with a financial advisor before making investment decisions. Stay tuned for more in-depth analyses and market updates.
Silver they have. So when people try and say that the silver price isn't doing anything and silver is inconsequential. You did an interview, and I'm using this in my speech next week with Ed Steer, who is, maybe the torch was handed to Ed. God rest Ted Butler's soul, and he'll be missed. And Ed showed this concentration and of silver. It's the largest concentrated short position of any commodity traded ever on the COMEX market, ever, by 4 and 8 banks, big commercial banks. And they are using, as I've been saying forever, they are using this against us, and they are draining and accumulating silver at these crazy low prices. So when we talk about just how important silver is, understand that when on COMEX you can have a handful of large bullion banks shorting it, the largest short position concentrated of any commodity ever traded. Why? Stupid as a mud wall. Why? In my speech, I'll talk about why. But at the same time, on the LBMA, again, remember, they understand, the BRICS understand what we're doing with price. And on the LBMA, they admit to trading 2.9 billion ounces of silver per day, right? Really? So this leverage to the downside of suppression is playing right into the hands of these countries. And so, yes, gold is tier one. Yes, gold is being accumulated and probably will be part of a new system. But silver should not be underestimated. It is the trade of a generation. And I do think that India, with their massive accumulation of it, is proving that. So for those of you that have silver and have been less than enamored with its price movement or thinking of buying it, I don't think you'll find a better asset, period, to buy when it comes to upside potential. So again, don't do as you are being told. Do as the others are doing. And you can see it exactly what they're doing. And they're using this suppression to their advantage, not only through draining the exchanges, not only from taking possession, but doing so in a manner the world has never seen.